Morning, everybody. It's Kenny Burdine. It's about 9:30 on July 20th, and I wanted to provide a quick market update to give you some of my thoughts on the last few weeks in the cattle markets. I've talked a lot about cattle slaughter, rightfully so, the last several videos. I won't spend as much time on it today, but bottom line is the last several weeks we've been within about 1% of where slaughter levels were in 2019. So that's still fairly encouraging. We are moving through cattle at a fairly rapid pace. Still, though, got to point out this backlog of cattle that developed for several weeks there because of so many plants being shut down and so many more just simply having to slow down. Haven't talked as much about this, but I want to talk a little bit about weights. I think I mentioned it in the last video I did maybe 2 or 3 weeks ago. But, weights have a big impact on production. And as so many of those cattle were backed up in the system, naturally they were getting bigger. And that bottleneck, when it started to come out, led to simply larger slaughter weights. I want you to notice there, look at both 2019, which is the dotted line, and then the red line, which is a 5-year average. Slaughter weights tend to come down from first of the year and bottom sometime in early summer. We did not see that in 2020 because it's backlogging. We're still not seeing them come down. So this is the biggest thing that I've been watching in terms of an indicator of whether or not we're starting to get current. And it looks to me like we're not there yet. The other thing that I would say to put this in perspective is that weights are running about 4% above year-ago level, okay, which doesn't sound like a lot, but understand what that means. That's a 4% increase in beef production due to weights. If you look at overall beef production levels, they're up somewhere between 4 and 5%. So what that really means is that all the increase that we're seeing is because of higher weights. So it's very significant. I'm going to be watching this as we move forward. I mentioned this as well in the last video, but I want you to look at the red line first. That's kind of a 5-year average, 2014 to 2018. And then even look at the dotted line, 2019. We have tended lately to make our fed cattle market bottom in the fall, all right? The live cattle futures market is pointing to a summer bottom this year, all right? Which would be encouraging to me to see a bottom sooner, because I think once we put that in, the markets will get a little bit of air underneath their wings. So week before last, there was a slight increase in fed cattle prices. We don't have the final 5-area average yet, but it looks to me like it's going to be about steady from last week. So I'm not going to say we've made our bottom, but I'm encouraged by the fact that prices are a little bit higher the last 2 weeks. So that is good news. Thinking about Kentucky, I'm going to start with heavy feeder cattle. They had dropped a fair amount from early June to about the first week of July. The last 2 weeks, fortunately, though, we've added about $8 a hundredweight to those heavy feeder cattle prices. They're up to about where they were in early June. What worried me about that drop from early June to early July was it was so counter-seasonal. Heavy feeder cattle tend to make their highs sometime late summer, early fall, think August, September. So seeing them come down in June was discouraging to me. This is good news, and I'm fairly optimistic about what they're going to do between now and the first part of fall. Calf prices, that's the black line, have continued to slowly erode over the last several weeks, but that's not all that unusual seasonally. They tend to make their peak sometime in the spring and then make their bottom sometime in the fall. So I'm less worried about the calf markets because that's not a counter-seasonal move for it to make. We're going to talk a little bit too about cull cow prices again. They had flat been on a tear since early April. But notice they've dropped by about $6 a hundredweight over the last 3 weeks. Now, seasonally, cull cow prices tend to be highest in June. So to pull back a little bit from June to July is not that unusual. This is more than I would have expected. I wanted to show you this, though, before I wrap things up. First of all, go back, look at blue line. Blue line's 2020. Look at how high beef cow slaughter was pre-pandemic. Okay? Here's the decrease, obviously, kind of during the pandemic and some of the shutdowns and slowdowns. I want you to notice, though, how high beef cow slaughter has been compared to 2019 levels the last several weeks. We've been running 7 to 11% above last year's levels on beef cow slaughter. So I think 2 reasons for that. Number one, prices have been pretty strong on the cull cow market, and that's always going to pull some cows. And then secondly, just kind of put yourself in the shoes of, say, a fall calving operation that weaned calves this spring or is weaning, some fall-born calves this summer. Given the calf market, kind of where things are, it makes sense those folks are going to cull a little bit deeper. So I think those 2 things have actually led to higher beef cow slaughter numbers. And that could easily explain the drop that we've seen the last 3 weeks in the cold cattle market. Like I said, down about $6 a hundred from where it was at the third week of June. So kind of wrapping things up here, I would love to see the fed cattle market make a bottom. I don't know that I can say that yet, but like I said, we've been a little bit higher the last 2 weeks, which is certainly encouraging. I think if the fed cattle market looks like it's moving up from a summer low, it will give some support to all these markets, including our feeder cattle and calf markets. The fact that the heavy feeder cattle market improved when it did, to me, was very encouraging. And I'm actually pretty optimistic that we can hold prices for those, maybe even at these levels, or a little bit better as we move towards, the first part of fall. So I'm thinking like about September. I don't see any reason to think the calf market decline will continue. That's fairly normal. Our calf market will probably make its bottom sometime, something like November would be my guess, about the time we're under grass and those spring calving herds wean their calf crops this fall. Last two things I'll mention quickly. There's been a lot of discussion about increase in COVID cases. Obviously, we're seeing it here in Kentucky. We're seeing it in other places. It's unclear how that's going to impact the cattle market. But, looking back, knowing what we know now about what happened this spring, I think it was less about the demand shock and more about the supply impacts that hurt our cattle market so much after we kind of got through the uncertainty. So I don't look for major changes as long as it's not a terrible resurgence, as long as we don't see major changes in processing capacity again. That's what got us so bad back in the spring. Those are the two things that I'm watching going forward on that front. And then I do want to make this point that although slaughter levels are back to about where they were in 2019, we've still got that backlog of cattle. And I see no reason to think that we're not going to be dealing with this, at least in the beginning part of fall, maybe a little bit longer now, how quickly things pick back up. So that's what we're going to be watching going forward. Hope this was useful. Certainly feel free to reach out to me with questions. Reach me by email, by telephone, or hit me up on Twitter. Hope you have a very good week.